what it takes to become the first $1 million woman? Submit your business pitch and apply for a loan at Dolla Financial of up to $200,000 and you could win a share of $3 million. Yes, you heard right. 3 winners of $1 million each. To enter the competition, you must be a female business owner in operation for 1 year and provide a business plan. Promotion runs March 8th to 31st, 2023. Conditions apply. You won't want to miss this. Dolla Financial Services. It's simple. We lend.
This is the earnings call for Dolla Financial for the financial year ending December 31st, 2022. I am Renee McDonald, COO and co-founder of Learn, Grow, Invest, and I will be your moderator today. With me, I have Kadeen Mears, who is the CEO of Dolla Financial Services, along with Trevine McKenzie, who is the CFO. Kadeen will be your chairperson for this call today, and Trevine will also be alongside him to present the financials and answer your questions. Welcome, Kadeen, and over to you.
Thank you so much, Renee. Thanks for everybody that's on the call today. Of course, this is the earning call for Dolla Financial Services for the financial year end 2022. And again, I'd just like to thank every shareholder that decided to join the call today. As usual, would like to just start off the call with a small prayer, just to give thanks. Dear Lord in heaven, as we take on this call today, we just ask you simply to just bless this call, lead us, guide us in your name. Thank you for your many blessings. In your name we pray. Amen. All right, so on the call today, we have Trevine McKenzie, who is our CFO at Dolla Financial Services, and she will be presented as Renee said, on the financial statements. So as we look at the slides for today, we'll just kick it off going straight into the presentation of the financial statements. Just some general remarks, just a recap of 2022. As we can remember, in June, Dolla successfully did their IPO, or our IPO, and we raised the maximum amount that we could on the junior market. We raised 500 million. We were tremendously oversubscribed. I think we raised close to $5 billion as well. Right after the IPO, Dolla decided to raise additional capital to continue to grow the business. We did our bond, and we successfully closed our bond at approximately $1.2 billion. We did our upsize to 1.5. We closed it at 1.2 as at October 31st. And so another milestone around December was that we, based on our profitability, we made dividend payment to our shareholders around December 7, 2022. Other important milestones, Dolla created its subsidiary Ultra Financier, which is headed by David Henriquez. That company was formed around October and has since dispersed close to $250 million and has now been a successful or profitable subsidiary of Dolla Financial Services. So we have 2 subsidiaries now, namely Ultra Financier and Dolla Financial Guyana. A second and probably the most important milestone was that we got our microcredit license in November from the Bank of Jamaica. This was, something that was very, very important to us, for us to continue our operation and for us to be supervised by the Bank of Jamaica. Our loan portfolio, as at the end of the year, we managed to grow our loan book to $1.7 billion. We basically more than doubled what our loan book was when we went to market in the IPO, and we managed to grow our profit before tax to $296 million, which is close to 100% when you compare it year over year. In terms of our initiatives, corporate social responsibility, we took on a number of ventures last year. One was that we donated We made a donation to the Manning School football team, which is my alma mater. We donated around $500,000, and we did a donation to the Spanish Town Hospital. We donated 2 television sets to the pediatric ward at the Spanish Town Hospital. And also we made a donation to the University Hospital of the West Indies. We made a donation of PPE supplies to the doctors there. Another notable donation was of tablets to the Junction Early Childhood Institution. We participated in a Maxfield Home Make a Child Smile Christmas treat. That was a very, very important partnership between us and the Dermond Group as well. And a broadly televised one was our donation of $1 million to the Jamaica Stock Exchange Telethon. The Jamaica Stock Exchange has launched their social exchange, basically a part of the stock exchange that focuses on social impact, and that donation went towards growing their platform, so these initiatives can be exercised so that you can have listed companies that focus on social impact. Strategic initiatives. We widened our footprint locally. We opened our Falmouth branch. We were focusing on our Maypen branch as well. We increased our partnerships to provide more value. And at the end of the year, Dolla had partnered with Samparis, which was a part of the Dermond Group, and Bridge FM. We donated $200,000 towards the cause. This cause was the same Christmas tree for Maxfield Children's Home. So last year, we were very active, as many of our shareholders would have seen. We were, in the space, giving back as much as we could while we continued to grow the bottom line of the business. All right, so at this moment, everybody is anticipating the most important part of our earnings call, which is the presentation of financials. And we encourage, all our shareholders and persons present on this call, to just jot down any questions that they might have, and we'll just take them after Trevine's presentation. So, Trevine, welcome, and you can go ahead.
Thanks, Kadeen, and good morning again, everyone. So let's begin with our highlights. Our solid year-end performance really capped a period in which we grew our profits above our expectations of about 35% to $296 million, as Kadeen mentioned, which represents effectively a 76% growth over 2021. Our loan portfolio also saw significant growth by 130% to $1.7 billion. And consequently, our assets grew also to $2.2 billion. We also maintained a single-digit expected credit losses model and non-performing loans of 4.1% and 6.5% respectively. So where the industry average is upwards of 10%. So this is really commendable as a year-end target for the company. And just to make mention, our efficiency ratio was at 50%, which is quite optimal also. Significant this year would have been the 130% growth in the loan book. Now, throughout the period, we would have executed an IPO and a successful bond raise, which really was a catalyst to the loan book growth. The company would have disbursed upwards of $900 million throughout the year, and with quite a bit of it coming after the bond raise in Q4. We also ended the period strong on cash as compared to December 2022 at $66 million. And this increase really is directly attributable to the net proceeds of the bond, which we would have closed in Q4. Our liabilities would have also increased by 208% as a result, of course, of the $1 billion bond raise. But despite the increase in debt, you can see from the loan portfolio and the interest income that we're going to discuss later that the funds were effectively deployed by the sales team. And I mean, emphasis should be placed on the word effectively, as the ECL has remained quite low at 4%. And this is one of the real metrics you can use to determine the real health of the loan portfolio. We also used the debt to repay existing borrowing. So we would have closed out just about 80% of the loans on the books prior to the bond raise. And you would have seen that from the year-end financials. Other elements of the balance sheet, of course, were share capital, and this increase is solely due to the IPO and retained earnings, which increased due to the income throughout the period, net of returning value to our shareholders in the form of dividends. We would have seen that dividend payment come out on December 7th, 2022. Moving on to the income statement, we would have seen a 95% increase in income year over year. Now, there is no question that the increased loan activity throughout the period would have contributed to this growth. After the IPO, we saw a surge in demand for the company's services, which we were able to maximize on as we had the funds to do so. And then later in the year, we would have tapped the markets again for over $1 billion, which we again deployed. Effectively, this 95% growth in income would have been a direct result of the 900+ million in disbursements that we executed in 2022. Line loan book income expenses would have also seen an increase by 121% year over year. In terms of the major drivers in the increase in expenses, in no specific order, the first would be advertising. Marketing is really a necessary element in executing a successful IPO and bond raise, and we would have spent approximately $7 million last year on these efforts. The balance was properly spent on promotional activities such as billboards, and you would have seen those on the Portmore Causeway, the North-South Highway, etc. We also invested in merchandise and fixed marketing assets to ensure that we are promoting brand awareness. Again, in executing the IPO and the bond raise and dividend payments, the company would have incurred sizable sums to ensure appropriate execution in terms of legal and professional fees. So you would have seen where those fees would have also gone up. As well as services that were generally based on volume would have increased, as both our customer base would have increased and our employee base also increased. The final notable line item within our expenses would have been staff costs, which saw an increase by 107%. We are pleased to say that we have invested in one of the most important elements of the business, which is its employees. We have sufficiently built out our senior management team. We have increased staff count by approximately 75%. And this includes loans officers in both the company and its subsidiaries and additional support staff to manage the volume. And of course, with the excellent work of the sales team, this triggers incentives, which also increases staff costs. So the big picture here is that with the increase in expenses, the business remains absolutely efficient in its operations. And you can see that by the efficiency ratio of about 50%. And these margins you don't find very often. If you look at our competitors and other companies in the financial space, you are not seeing a 50% efficiency ratio at all. With that being said, the end result would have been a tremendous profit before tax of 296 million, which is 76% of a growth year over year. And as mentioned previously, our vision for the year would have been just about 35%. So we're quite pleased with the year-end performance. Just touching quickly on our segments, I know that our investors and just the market at large is quite interested in hearing how our segments have been performing. So Dollar Guyana Inc. would have seen an increase of 213% in their loan portfolio to 177 million Jamaican dollars in December 2022. And basically their overall contribution to the loan book would have been 10% to the consolidated numbers. Dollar Guyana Inc. also saw 113% increase in profit before tax and contributed 35 million to the consolidated profits. And if you zoom into the financials really on the segments note, you can see these numbers there laid out for you. So we really have an experienced team in Guyana who have spent time to understand the market. So we intend to continue to untap the value from that fast growing economy. Moving quickly to Ultra Financier, the newest subsidiary who has produced a loan book of 250 million within its first 2 months of operations. And I mean, interestingly, Ultra's loan book now represents 14% of the consolidated loan portfolio and contributed a whopping 12% to the overall consolidated profits for the year. And this is just with 2 months of operations. In terms of our cash flow, we ended the year stronger than we did in 2021 by over 400%. As usual, we would like to point out that cash is our inventory, and we place effort in ensuring our cash is working for us, whether it's deployed as a loan or earning interest elsewhere. So we ensure that there is enough to fill the demand and to fulfill our obligations while not having too much cash sitting idly. We spoke about our efficiency ratio earlier and our constant efforts in optimizing OPEX and maintaining lean expense schedules. However, other metrics that depict the efficient deployment of capital would definitely be, for example, the return on equity. At 57%, it's clear that the company is effectively using the equity that we would have generated from the public to generate profits. The company continues to contribute or operate a high standard as it relates to delinquency, with non-performing loans at 6.5%. This increased from 5.3% in the prior year due to specific large loans whose collateral are in the process of liquidation. With our loan book being secured by over 75%, coupled with our dedicated, knowledgeable collections team, we find that we are more likely to recover our receivables, even if it results in liquidation. In maintaining the loan book quality, we have also ensured the health of the loan value ratios and controlled concentration in any one sector. So you won't find us lending, let's say, 50% of the portfolio to tourism. We limit that so we're able to diversify the portfolio and manage the risk. In terms of our financial outlook, now we expect our first quarter 2023 revenues to be in the range of about 250 million, which assumes a growth of approximately 75% year over year when we're looking at March 2022. We also anticipate the upcoming quarterly expenses to fall within the range of 115 to 125 million, and this is really in line with our budget. Now, elements such as staff costs will see increases as we ramp up sales to propel the growth that we're seeing within the company. Another element worth mentioning is the increase in interest expense as we service the $1 billion bond. Nevertheless, we do anticipate steady increase in profits by at least 50% year over year in Q1 2023. Now, in closing, I mean, it was a challenging but pivotal year for Dollar. We made tremendous strides in terms of revenue growth, and we have set a strong platform for 2023 and beyond. We continue investing in the future growth of the company. We will continue to do so while remaining absolutely focused on delivering continuously strong performance.
Hi, my name is David Henriquez, CEO of Ultra Financier. Here at Ultra Financier, we accept a wide range of luxury assets to be used as collateral for your Ultra loan. As you can see here, we accept a wide range of fine jewelry at Ultra. On my left here, the rose gold Cartier love bracelet. From Cartier as well, the Justin Clou in rose gold, the vintage Alhambra pendant from Van Cleef, and the Oyster Rose Gold from Rolex. We use different types of metrics to authenticate and value the items. We use weight, material, and also the certificate of authentication, which will have the copyright number and serial number of the item. These items together value approximately $3.6 million. Therefore, putting your ultra loan value at about $1.8 million. It's that simple. Contact us for more information.
All right. Thank you so much, Trevin. Thank you so much, Trevin, for that recap. As you can see, guys, it was a very busy year for us last year, executing on that IPO, doing our bond right after launching a subsidiary, pushing to get our money lending license. It's a lot that we have done in 6 months. We IPO'd in June. The 6 months post IPO was a busy 6 months for us. And 2023 is a new and exciting year. I know the shareholders are looking for a lot of growth, continued growth from us. Obviously, we're not slowing down, and we're always creative in terms of new product, ideas, innovation, way to scale. We categorize ourselves as a regional company, so that's definitely our push to continuously grow regionally. And speaking of that, based on our outlook here, regional growth and expansion and business segments, one of the main things for us is, countries outside of Jamaica that we can focus on. We're in Guyana right now. We're in Georgetown. We're looking to open, I'd say by second quarter this year, our second branch in Guyana in a town called Burpees. Our team has been visiting the town to really get their ear on the ground, kind of get a feel of what the business would be like in Burpees. So we're exploring that currently, and I'm happy to say that by second quarter we should be seeing our second branch in Guyana. A very important point to note is that we're now supervised by the Bank of Jamaica, and one of the requirements is that each time we look to expand now, if we're looking to open in another country, we have to submit just to get the blessings of our supervisor in terms of operating in a new territory. So we have submitted to the Bank of Jamaica, applications to open branches in Eastern Caribbean countries, particularly St. Lucia and Barbados, similar culture as Jamaica, and a lot of SMEs are there and small businesses. These are smaller countries, less population, but definitely booming, and there is a need for our products and services. So we continue to explore other opportunities as well. We are eyeing South America just the same. Obviously, one of the main barriers to entries when expanding into other countries would be, language barrier. So even though there might be opportunities to expand in countries, for example, next door to Guyana, Suriname, they don't speak English. Guatemala, countries like that, they speak Spanish. So a barrier to entry that we have to consider is, the language barrier. In terms of improved systems and processes and internal efficiencies, Dollar from the get-go, we have been very cloud-based in our operations. So what that means is that most of our systems, our loan management system is cloud-based. Our accounting system is cloud-based. We basically don't have a server at a branch, for example. So that really helped us in terms of scaling and in terms of our efficiency as well. In terms of increased partnerships to provide value, We partnered with Fostridge closer to the end of the year, and basically we did this solar venture where Fostridge wanted to provide access to solar for the average person who owns a home who wants to reduce their electricity bill by installing solar. Solar is typically expensive as a upfront cost. So what we at Dollar do is that we allow you to buy that solar panel, install it, and get a more comfortable loan payment, a loan payment in which you basically can, the money that you would have used to pay a JPS bill, you'd basically be using that same cash in order to service your loan facility. Throughout 2023, you will see increased partnerships, especially in Western Jamaica. Tourism is back on the rise post-COVID pandemic, and we'll be making some announcements for partnerships that we will be doing in that sector. So, you guys can look out for that as well. In terms of continuous improvement of customer service and interaction, um, we have built out our marketing department, and our marketing department is headed by Tashone Ellis. And basically, Tashone has been focusing on customer improvement, customer satisfaction, in terms of getting feedback from customers, and that feedback we use it to improve not only the service but also the products that we offer as well. So through our marketing department, we continuously seek ways to find ways to get customers to interact with us more, whether it's through social media, whether it's through our WhatsApp chat. To, I mean, customers. I think one of the strengths of Dollar is that we grow based on our customers' needs. So we continue to innovate. We continue to change based on the needs of our customers as well. In terms of outreach programs and giving back, we still work closely with the Jamaica Stock Exchange and their initiatives as well. Recently, we launched the $1 Million Woman, which we are looking to empower women through finance, giving them access to capital so that they can grow and scale their business, and not only giving them capital, but allowing them to understand that they can borrow money and use that money to continuously grow their business as well. Because that's how I started as well, borrowing to grow my business. So that's a very important initiative for us. It will be running for the entire year. And we basically want to change the lives of these women, not only by making them millionaires, but also by teaching them through partnership with even Learn, Grow, Invest, who's hosting this earning call as well. We're looking to, motivate them. We're looking to show them certain skill sets that they can use as well in their startups or in their business, teach them how to scale their business, how to properly manage their financing, etc. So in terms of the overall outlook and what to expect, we'll continue to grow. As we said, we have a new branch. We want a new branch in Guyana by second quarter. Fundraising is a continuous effort that any lending institution has to do. So we are in the process now of raising capital for the business. We raised $1 billion after the IPO, and we were able to deploy that capital prudently, which saw a growth which really sparked the growth in the loan portfolio and our profitability. The performance that we see for 2022 is important to note that this was basically half year performance for us. We really got going after the IPO when we raised that 500 million and when we did the bond. So in terms of this year performance, it is safe to say that the performance of this year for a full 12 months will definitely outdo 2022's performance. But we are not just relying on that alone. As I said before, we're processing funding facilities so that we can look at acquisitions as well. We're good at scaling organically as a company, as in we can grow our company without, buying other loan companies. But a very important element of scaling the business is acquisition. So we have been doing due diligence on opportunities, and as soon as any agreements are made, definitely that would be announced through the stock exchange as well. It's important to say that even with Ultra, it has grown tremendously, and the demand for loan way exceeds, the supply. So Ultra, as a standalone subsidiary, will be raising capital on its own. Dollar Guyana, as a standalone subsidiary, also will raise capital on its own to continue to grow its loan portfolio as well. So, in general, I just want to thank the shareholders for the continued support, and my team for exceeding the expectations, always beating the budget, always being innovative in terms of new product. For example, launching of the Ultra brand as well. So I just want to again thank all the shareholders as well.
Thank you so much, Kadeen. And I also want to thank Trevine for such a comprehensive report from both of you. I'm sure that the audience appreciates that. So we have a healthy pipeline of questions, and we're going to get into that now. I do want to take a moment to just invite our audience from whatever platform you are watching right now, because we are streaming across multiple platforms. Wherever you're watching from, please feel free to enter any questions in the comments for the Dollar team, and we will try our best to get to them. If it is that you are watching on the replay, feel free to put those questions in the comments below the video, and the Dollar team will get to those as well. So our first question comes from Limitless Podcast. What percentage of the recent $1.2 billion bond money is left to be dispersed?
Yes, Trevin can take on that one.
Yes, we have disbursed everything. As Kadeen would have mentioned, the demand outweighs the supply, and we prudently dispersed all the funds.
Awesome. I think they'll be happy to hear that. Also from Limitless, by which month this year do you expect to finish on lending the recent bond money? I think that was asked. That was answered, just now. So when do you guys plan on raising more funds? And if so, which route would be preferred?
In terms of fundraising, obviously we have relationships with financial institutions based on our financial performance. It's much easier for us to access, credit facilities through, our banks, etc. So that's kind of like the route that we're taking now. There are also external lenders as well that we explore options with. So in short, if the question is if we're looking to do another bond in the near future, not for Dollar itself, but probably for one of the subsidiaries.
Okay, thank you for that, Kadeen. How has the take-up been for the Fosridge Solar partnership?
The Fosridge actually had a pipeline of pipeline built up of demand. So after that marketing, what happened is that we received a lot of calls. So the take up has been very good, very tremendous for us. So what we've been doing is just assessing, on a customer by customer basis to ensure that we unlend this money prudently.
Okay. Are there any plans to develop a loan app to compete with your competitors?
So, I mean, this is a question. I mean, everybody can develop an app nowadays. I mean, developing an app is like, it's not like 10 years ago when it was like, a big thing. But the question is, why develop an app? We've asked ourselves that question internally, and the answer is if we don't have an app and we cannot meet our demand for loans, and we're out of money then because we're lending so much, and I don't think that we need an app right now. I think probably when we have a built up of surplus of liquidity and we want to deploy that, then we'll probably explore, deploying via a loan application. However, through our website, we do accept loan applications, so people can apply for loans online. And the truth is, even when you have an app, people still going to DM our Instagram page or our Facebook page anyways. It's not like they're going to download an app to reach us. Dollar has a very strong online presence, and what that does is people can reach out to us. We have our marketing team is very responsive. So if you check our DMs are always active, and this is the method that most people use in terms of reaching out as well.
Okay, so it is a strategic decision not to have an app at this time.
Correct.
Great. Any news or timeline on the acquisitions mentioned previously? And I take it there was another question about the acquisition or the consideration of acquisition for Access Financial specifically.
Yeah. So, obviously the story of Access was all over the media, but in general, I just want to say that acquisitions are nice to say that you're doing, but it takes a lot of due diligence, and you have to ensure that what you're buying, you're getting value for money, and creating value for the shareholders, and not just aiming to grow a share price to say that you do an acquisition. It's very important that you're creating value, that you're buying something that is of quality. We're in the lending business, and when it comes to assessing delinquency of a loan book or the quality of a loan portfolio, it takes time. So each time that we see an opportunity, we spend time on it, and when the right time comes, we will announce whatever acquisitions might come up.
Okay. And are there any plans to incorporate AI into loan risk calculations?
What I'd say to that again, and I mean, when it comes to technology, it has to be, you have to strike a balance between, using the human element and the technology element. What you have to realize with Dolla's loan portfolio is that majority of our loan book is secured. The second thing is that compared to our competitors will lend to consumer. If we're separating the two types of loans, consumer loans and business loans, our competitors lend 9 out of 10 of their loans to consumers through consumer lending, while 1 out of 10 of their loans goes to SMEs and businesses. So for us, it's quite the opposite. We lend most of our capital to entrepreneurs, to SMEs, and probably 1 out of 10 loans to consumer lending / salary deduction. We don't focus on that type of lending. So with our type of market, it takes a lot more human capital, human element, while we still use technology in terms of loan assessment. I mean, you can apply as much AI as you want, but when you're assessing a person's business in halfway through, you can't rely totally on the AI. You literally have to go there and assess, what type of business it is, what's the traction like, what's the environment that it's operating in, and collect that data and use that with our internal models to assess the quality of a loan. So that's kind of why our delinquency is actually, I'd say, the lowest in the market, and why our loan book quality is probably the highest in terms of having a lot of secured loans as well.
Thank you for that explanation. Limitless again is asking, do you guys plan to pay quarterly dividends?
Limitless is an exciting shareholder.
They were early in the chat too.
I know. Limitless, we pay dividends based on the performance, and our dividend policy states that we pay up to, I think it's 50% of whatever our profitability is. And so for last year, we made 2 dividend payments, one closer to the end of last year, and we announced one this year as well. So what we did is we paid 50% of that rounded $300 million in dividends. So the decision to make a dividend payment is actually by the board of directors, and it's based on us exceeding expectations, and that allows us to give back value to the shareholders. So that decision is not, okay, it's a second quarter or it's a half year, so we're gonna pay a dividend. It's a decision that's made by the shareholders based on the performance and the liquidity position of the company.
In addition to that too, Kadeen, I think I just want to share with our shareholders that in paying dividends, we also need to look at our free cash flow to ensure that from a cash perspective, it's also feasible. So that's something that we also take into account.
Thank you for that. There was a question from the audience about why you opted to pay dividends now. So I think that would have answered the question.
So and I see a question, why is Dollar paying dividends so early after an IPO? It's very important as a company to so you have certain types of companies that one they don't pay dividends, right? It's very important. We have a lot of shareholders that are investing for the long haul for Dolla Financial, and it's important to give a return on the investment that a shareholder makes, especially if the company is outperforming its budget. That means it's in the position to give a return to its shareholders. So if for this year we had a budget to make $300 million and we made $500 million, I think it is fair to give the shareholders some return on their investment.
Absolutely. So the next question is from Mike J, and he's asking, what is the current take-up of the solar financing service? I think you would have mentioned that earlier.
Yeah, I would have answered that earlier. But in short, the calls do come in, but of course, each loan is assessed, by our underwriting department to ensure that it's a good loan.
Okay. O'Neill is asking, salaries and traveling benefits increased from 33 million in 2021 to 64 million in 2022. What was the major driver behind that almost 100% increase over a year? Trevine, over to you for that one.
Yes, I think I mentioned in the presentation that we would have ramped up staff by about 75%. And this was in an effort to manage the demand that we would have seen throughout the year. We also built out our senior management team to the T to ensure that we are as efficient as possible. So those two factors really led to the 100%, almost 100% increase year over year.
Yeah, I'm not sure if it's your microphone, Trevine.
I'm hearing her clearly.
Okay, I'm getting a feedback. I'm not sure where it's coming from.
Okay. Are you able to switch from you're good now?
I'm good.
Okay, fantastic. So, and O'Neill's next question is, when is your Ocho Rios branch coming on board?
Okay, I mean, without disclosing too much, I think the decision was to identify a location that could service from Draxal to Ocho Rios and St. Anne's, around that section. So we're still looking to find a perfect mix, St. Anne's Bay, to find a perfect location around the Draxal location that can service multiple areas, Ocho Rios and the other side as well. So I'd say sometime definitely this year. I mean, we're in first quarter.
Okay. So again, as your shareholders and clients are very engaged, it is a great opportunity for them to share that information if they know of such a location as well, right?
Definitely.
All right. So the next question is from Mike, or rather it's a comment. You should make a promotion like get your cell phone or laptop loan and pay off your student loan. Those would get some good pickups if they were promoted separately.
All right.
So well, I guess that's a suggestion.
This is actually what we like. We definitely like when our shareholders give feedback and share ideas. It's very important to us so that we can tailor products and get more innovative.
Absolutely. Philip is asking, do you have plans in place to ensure compliance with the looming implementation of the Data Protection Act?
Yes.
So I
Oh,
think
go ahead, Trevin.
yes, because we've been working actively on this, anticipating the Data Protection Act. So we have assessed our systems and processes, and we are putting the necessary things in place to ensure that once the act comes on board, we are fully ready.
Yeah.
Well done. Roland asks, are there any future plans to expand the business across multiple Caribbean countries?
I mean, I would have touched on this in the outlook that definitely we're looking at 2 Caribbean countries now to expand. I'm just waiting on our supervisor, BOJ, to give us the go ahead. So this has always been our mandate. We're in Guyana and we're looking at other Caribbean countries.
Now we go to our community questions. This is from Philip. Do you have any data to say whether your IPO has increased your customer numbers at locations that existed before listing?
I mean, one of the benefits of an IPO is just the marketing and the brand awareness that comes around your company after you list. And I can tell you, um, after raising that $500 million in the IPO, the amount of calls and persons who never knew about Dollar before, they knew about Dollar post IPO. So the IPO definitely boosted the customer base and the branches and the branch performances.
Okay. Also from Philip, has there been material progress on any acquisitions on the heels of the Microfinance Act? Again, you touched on this, Kadeen. I don't know
Yeah,
if
we
you have
touched
anything
on
else
it.
to add.
No, it's just that it's important to note that you know we we are obligated to make announcements to the JC once we make any substantial progress, or so that those announcements will definitely be made through the JC.
Understood. Elaine asks, are there any plans to raise funds in the short term via bonds, APO loans, or rights issue?
We had touched on this already. We've definitely gotten loan support from our commercial banks, and we're definitely exploring options to raise capital in excess of 500 million in the next 3 to 6 months.
Understood. From Earl, have you seen where the high interest rate is affecting your loan book?
No. The increase in interest rates is twofold for us. How it affects Dollar is our cost of capital. So when interest rates go up, our cost of capital goes up. So our cost of borrowing goes up. So when we do a bond, we have to give a higher premium under a bond. When we borrow money from the bank to unlend, they're lending us at a higher rate. So it will cut into our margins a bit. But however, obviously, we don't lend at commercial banking rates. Our rates are much higher. So that allows us to risk in any movement in our cost of capital. So during this, what's happening in the economy with the rise of interest rates, we did not need to raise our interest rates on our customers. Actually, we've been seeing an increase in customers coming to us because obviously we're more flexible and the rates at the banks are going up, so they'll prefer to come to a Dollar Financial to get a loan. Given that we would be more flexible.
Thank you. Anything to add to that, Traveen?
I think Kadeen touched on it perfectly. The interest expense will be affected, but the impact on the loan book is not as everyone would think.
Okay. Cruz is asking, what kind of digital innovations are you focused on now?
As I said, we keep our business model very simple. We're in the business of lending, and we need to reach customers in order to lend them. And how do we reach customers? We keep it very simple. Social media. It doesn't get more simple than this. We don't try to overcomplicate the business that we're in to do apps and try to increase our cost and all of that on things like this. We're innovative in the segment of our products, in the segment of our operation and our internal efficiencies. But in terms of apps and all of that, the demand is already there, and we are where the people are, which is social media and on the ground through our branches.
Understood. Our next question is from Clinton. What is the timeline on the listing of any of your subsidiaries?
That's a good question. I'd have to discuss that with my board. But I mean, listing, of course, would be to raise capital. So if we're not able to raise capital or as much as we need for a subsidiary through debt, then we'll explore equity options.
Will Dolla shareholders benefit from those additional share capital like dividend in specie or discount to market price if equity is the option? And that's from Mike J.
Well, if I'm interpreting the question correctly, benefiting from share capital like dividend or discount or market price equity is an option. I mean, shareholders will benefit from, because in general, the shareholders will benefit from anything that the company does if it pays dividends or if it decided to raise more capital through rights issue or whatever it is. Then definitely shareholders will have their option to exercise on their rights.
Right. So I would ask Mike J if that was actually what he was asking, or if there was another component of the question, because it was a little unclear for
Yeah.
us on this side. So if you could rephrase and repost, or let us know if the answer that you received is what you needed, that would be appreciated. All right. So our next question, Limitless is back. What percentage of calls from Fosterage customers would you estimate get approved for a loan?
I mean, typically, just like any other product or service, it's probably 1 out of 10 calls that you get, because what means that it still has to go through an underwriting process to assess the customer's ability to repay. So we'll get a lot of calls, and you get a lot of calls, but you might not get an application from 5 out of 10 of these calls, and from 5 out of 10, out of these 5 applications, probably one is approved. But just to keep in mind that it's a lot of calls and a lot of applications.
Noted. Have the employees been using the offered interest-free loan package to buy Dolla shares on the market?
As the employees been using the offered interest rate for loan package? Well, we have done for our team members similar to our ESOP, where our team members, once they want to exercise on their right, they get options to buy Dolla shares with certain conditions. Of course, this loan based on our employee share offering program, they'll get an interest-free loan technically to buy their shares that they want in Dolla, and then there are conditions around how if they can sell these shares and when they can sell these shares and how these shares are vested.
Okay, understood. So Mike J is providing his clarification. He said he means if Dolla would provide shares, for example, for Ultra to current shareholders in Dolla before listing, similar to Blue Power and Lumber, or a
Oh,
discount to the IPO price.
so in the event that we're if we had decided to list Ultra, if Dolla shareholders will have the first options to buy into this IPO.
Correct.
Okay, I mean, the structure of these things are done most of the times by our investment banker, who will be leading the IPO. But obviously, our current shareholders would be strategic partners, so they would get some form of options to participate or to buy in if we decided to list any of the subsidiaries. In terms of the discount and all of that, that's normally discussed with the investment banker based on how the deal is structured.
Thank you for that. Thank you for the clarification, Mike, and thank you for the response, Kadeen. I believe this is our final question. And it's from Elaine. As the CEO, do you plan on increasing your stake in Dolla by buying more shares?
Well, if you look at my shareholding is public. I own shares individually and I own shares through Dequity, which is my investment holding company. And if you look at my shareholdings and the top 10 shareholder, each time that comes out, the shareholding increase. That means that I'm using my paycheck to buy more Dolla shares. That's how much I believe in the stock. So, yeah, definitely. I look to continuously increase my stake, especially given that the company is just starting. It has not even been a year since we IPO'd, and based on the performance, just imagine what the company will look like 5 years from now.
Thank you so much for that, Kadeen. I see. You see, you're also giving some investment tips, right? You use your paycheck to invest each month. So thank you, Trevine. Thank you, Kadeen. I'm going to give you the floor to allow you to say, make a final call or communication to your audience and your shareholders at this time. So please go ahead, Kadeen.
Thanks a lot, Renee. I'd just like to say again, thank all the shareholders for the continuous support. I've seen all the feedback from our shareholders online, whether it's on Twitter or Instagram. We've taken these comments, these feedback, and we've used it to continuously improve the business. So I want to thank the shareholders for your continuous interaction. I mean, we see it, and just to note that whatever our performance was last year, that was just a half-year performance, and we'll continue to exceed the expectations of our shareholders.
Hi, I'm Kadeen Mears, CEO of Dolla Financial Services. Dolla was formed to open doors. Our mission is to make getting the money you need a quick and easy process. When life comes at you fast, you can count on us in your time of need. We provide financial services for those with a vision and those on a mission. No matter if it's a business loan or personal loan, small or medium, once you want to grow, we lend. Over the past 7 years, Dolla has played a vital role in the microfinance market, disbursing more than $3 billion in loans to more than 5,000 Jamaicans. We will continue to play our part in the growth and development of Jamaica and the Caribbean by providing financing support to all entrepreneurs. Whether it's a short-term loan until your next payday or a long-term business loan, visit us at Dolla Financial Services. Remember, we lend.